This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? Phil Tarrant, host of the Smart Property Investment Show. I hope you're well, getting ready, getting set for Christmas. We'll be recording, we'll be producing right throughout the Christmas break. So do not despair. If you're looking for something to do, if you're sitting around going, what am I going to do? I've got to jump on a lawnmower. I've got to do something. I'm going to go for a walk. I'm going to walk the dog. Or I'm going to sit on the beach and drink some cocktails. Fear not. Look it up, Smart Property Investment Podcast, wherever you listen to it. You'll track us down and we'll be recording per our usual cadence right throughout the break. So a couple of times a week, you get to tune into us. And I hope it helps you align, adjust, calibrate, get set for 2023. We're moving in. We always say at the end of every year, moving into a new year is a good time to plan, reset, think about where you're heading, goal setting, all that sort of stuff. A little bit more complicated this time around. You think about the last couple of years, we've had COVID pandemics, and before that, you had sort of a tighter interest rate environment in terms of serviceability with APRA intervention. So there's always a theme that you round out one year with and think about the next year. But I reckon 2023 is going to be a little bit more complicated than previous years, despite some of the challenges that we've had, including COVID and everything connected with it with supply chain constraints. You've got a rising interest rate environment. How and where that's going to stop, I think the commentators, the experts are somewhere between 3.85% and sort of 3.1%. So who knows where it's going to land? It's a big gap for Aussie investors and homeowners at 3.85%. I think there's going to be a lot of hurt in Australia, and already you're starting to see a lot of spending come off as we enter the Christmas period. I'm really interested to see how retail sales go through this current cycle, credit card spending. These are all clues of the attitude Australians have towards finance, their own personal finances, and whether or not these interest rates are starting to hurt and impact, and whether or not this inflationary cycle we're in right now is starting to hurt and impact. So the Reserve Bank has an agenda and it's trying to slow down inflation. It does it by a whole bunch of different means, but one of them is ratcheting up the official cash rate, which lenders use to set their mortgage rates. And you find that people stop spending when the mortgage becomes too big and there's less disposable income. So that's what the RBA is trying to get. Criticism whether or not they started too early, started too late, started too hard, should have gone softer earlier, but they've got it hard because they're probably not going to pick it exactly where to stop. But one of the tools they have is that they can start reducing rates if they do get it wrong. The challenge you have there is whether or not banks will follow and pass that on. Banks are happy to move quickly on the way up, but less so on the way down. So I want to have a chat about some of this stuff today, because depending where your mindset is, you could think you're in the worst market ever or the best market ever. People talk about bulls and bears when it comes to markets, more of a stock market type of thing, but same applies inside of property and property investment. And again, it comes down to mindset, how you view current markets, where those opportunities are, irrespective of the risks and the threats. Here to have a chat about it with me is Sam Gordon. He's Director of Australian Property Scout. He's back, not by popular demand. I've dragged him in to have a yarn with me. Sam, how you going?
Good, Phil. Good, mate. Thanks. It's good to be back.
Yeah, no, and good to see you, mate. Apologies for the long-winded intro. I'd like to sort of set the scene a bit for how we're going to chat about stuff.
Yeah, no worries, mate.
How you see it right now? Bull market, bear market?
I think the market is definitely seen as a bear market at the moment, as if the world's kind of coming to an end sort of thing in the market. You know, the great growth runs and everything of the last couple of years are done. But, mate, I think there's always opportunity, right? So it's being a bull and going against the grain in a market like this. Yeah, I think that's where so often people can make their biggest wins, and the others who sit on the sidelines miss out on it.
Yeah, and this is it, right? Being a bull in a market of bears. Now, the bears in this market, some of them are economic forecasters and commentators, and they're always out there irrespective of the market. Some of them, was it Martin North? Martin North has always been, is it Martin North, or is he the guy from an Iran-Contra scandal? That's I don't know. Could be, I don't know. Oliver North, sorry. Oliver North is Iran-Contra arms deal. Martin North is the economist who's been talking about price drops of 40%. He's probably sitting there going, I told you so. He's been telling us for the last 20 years. So maybe that's the bear market. I think there's a lot of Aussies who are getting jittery to my earlier comments around their ability to operate in this market. We're talking about property investors, so it's a show for property investors. They might have a bearish mindset, but you're taking the bull by its horns.
You are, mate. You are. That's what we should be doing for sure. Yeah. It's an interesting way of putting it, mate, because it's not only the economists and like the media and everything that's putting it out there. Obviously, they're the ones that instill the fear in the greater population, but it's so often the people that are around you or budding investors or people trying to build their portfolios, people who even might try and mean well, but they're taking that mass media argument and then they're regurgitating it back onto everyone to kind of, lessen someone's ability or will to get out there and invest in the market, where they might have just missed the last 2 years of the market because they didn't have the deposit or whatever to get into it, and now they're, now they're getting talked out of it by someone who doesn't really know what they're talking about.
Yeah. And again, be careful who you listen to.
Definitely.
There'll be a whole bunch of people out there. You must be seeing it also, Sam, that through the whole COVID period, they're like, well, I'm not going to invest during COVID because I'm unsure about this, that, and the other, what's going to happen. I'm worried about vaccines. I'm worried about evil boogeyman economy type things, shifts happening. So I'm not going to invest. I reckon there's a lot of those people now going, I'm ready to invest because my mindset is more practical around it, but they can't invest because interest rates are going up and what they were thinking they could buy, they can't buy anymore and the serviceability is down. I bet you they're all thinking now, geez, I wish I invested 2.5 years ago at the onset of COVID and got the growth that most people got. So there's a lot of losers out there at the moment.
Mate, it's an interesting thing because it's almost every year some big event happens that puts everyone on the sidelines for a while, right? Like you look at even 2019, you go a year before that, you had the election, the federal election. I don't know if you would remember this. Everyone was sitting on the sidelines because of the negative gearing potentially being scrapped and what that could potentially do. And then you had COVID. You had these different bloody mass media outlets saying 40% price drops, and if anything, it went 40% plus the other way. Mate, we're in a similar environment now, but you just got to be heaps more selective with your markets to still be able to. But it's always been the same way. You be selective with your markets. You buy in the right markets, you're going to get your growth. So it's still a very similar story. It doesn't change, mate.
So asset selection, location selection, right property, right place, right time. And I don't really like using the term because it's sort of it's a catch-all of sentiment, which probably isn't positive sentiment. That is in investing against the grain. And this is a term that gets thrown around a lot, where sort of counter-cyclical investing. Buffett's got famous quotes around it, like, be fearful when everyone's greedy and I can't remember what the quote is, but essentially counter-cyclical investing, when everyone's out there going nuts, hold tight. When everyone's sort of down in the doldrums, go hard.
Yeah.
So that's your sort of investing against the grain mindset. Is that something you've embraced?
It definitely is, mate. It definitely is. I think it's something you got to be very open to what's actually happening out there from a broader picture as well. As a lot of people, because of your big markets are going through price falls at the moment as well, it makes it look, and it does drag the national, the median house price across the country down. So if you're looking at it from that perspective, if you're just reading those numbers, it looks like the whole market's in decline. But if you look into smaller areas, smaller regions, other cities that didn't boom just because of, a little COVID-driven spike or whatever, there's always opportunity out there. So I guess that's a big thing with investing against the grain, is like looking where the actual opportunity is, because there's multiple markets out there, good, solid markets that haven't skipped a beat. Sydney and Melbourne have come back 10-15% back this year, and there's others that are 15-20% plus up this year. So there's always opportunity out there, and that won't stop next year. Yes, rates are going to cause some pain, but that just creates opportunity. But you've just got to always be looking for those markets that have still got the fundamentals. I think the affordability is the big one. A lot of people like saying, it's not, they probably won't come back too far, but you've got to remember one thing is, like, prices kind of hit a peak, especially if you look at Sydney earlier this year. They hit a peak and the interest rates are around 2%. What's going to happen at that peak level when the actual full, force of those, let's call it 6%, say, interest rates, you're literally tripling what someone was paying before at 2%, and you're up to 6%. That literally, just that alone puts affordability through the floor. Like it tanks from that side. I don't think it's going to see a huge market crash, but how much more growth could potentially be coming through to that market if the affordability goes through the floor? In my opinion, is very little. Whereas if you look into the other areas where the affordability was very strong at the beginning, and yes, it's lessened because of the rate rises, but you're looking at the areas, you're seeing wages growth, seeing rental price increases as well, massive booms in a lot of rental markets across the country at the moment. Like, where is it still more affordable to be buying rather than renting? Yeah, they're big things that we're really looking into and targeting at the moment, getting great results from.
Yeah, this mindset around how do you take advantage in a market riddled with fear?
Yeah.
And it is riddled. We'll dig into that. We'll go to a quick break, everyone. Just stay with us back in a moment. Welcome back. Phil Tarrant, host of the Smart Property Investment Show with Sam Gordon from Australian Property Scout. Now, Sam, my people tell me,
yes,
I hear in the grapevine that you've got yourself a fast starters ranking with BRW. So business is booming, is it?
Mate, it's doing well. It's doing well. It's the AFR, and yeah, man, it's Australian Financial Review. It's doing very well, mate. We've had a great couple of years. Helped a lot of clients and a lot of investors achieve some great results, and yeah, mate, very very proud to be there. I've got to say.
Yeah, and what's the catalyst of that? Is it, the market made people super inside of them property, and because they've been listening to the Smart Property Investment Show, everyone thinks they got to use a buyer's agent these days. What's fueled the growth, mate? Other than probably you're doing a good job.
Mate, I think doing a good job is a bulk of it. Being on Smart Property Investment Show is definitely.
Oh, it's got to help, right?
Mate, yeah. It's definitely helped.
Mate, 240,000 downloads a month now. This thing gets.
Wow,
it's
really?
Ridiculous. Yeah,
Holy shit.
It's
That's massive.
Been clocking those numbers for some time now, but I still sit there and just go, oh God, that's a lot. There's a lot of people tuning in. Listen to you talk about property.
Yeah. No, that's huge, mate. That's huge. Look, I think a huge part of it with us as well is we have a lot of repeat clients and repeat success. So clients making great money on a deal and then being able to refinance and pull out equity to roll into multiple deals. A huge amount of our guys, it's a huge percentage. I don't know the exact number, but that are repeat offenders, for want of a better description. 2, 3, 4, 5+ properties that they've bought and they've acquired with us. And I think that's what's really fueled where we've gone as a business is just being able to really, push on that and help people kind of keep building their portfolios. And that's really just helped us with our numbers, mate, more than anything.
Yeah, I haven't looked at the most recent census data. I think it was census data come out, which, they always talk about how many Australians own property and all that sort of stuff. By memory, I think it's about 25,000 Australians own more than 6 properties, right? Most property investors. I think 8% of all Australians claim some sort of deduction for investment property on their tax return.
Yeah.
I think about that. But something like 90% of Australians, 90% of property investors only own between 1 and 2 properties, right? Yep. I still don't have the numbers on the impact and influence of buyers agents. And I like to think that we've played our role in socialising that industry sector. But of Australians that own more than 6 properties, I'd really like to see the numbers. How many of them actually use or have used a buyer's agent? And that's the thing for me. You talk about sort of inverted commas repeat offenders, people who it's like they stumble on this thing called property investment, right? And they go, hang on a second, this seems pretty good, really. Yeah. And to be fair, if you get it right, you sit there and just go, why isn't everyone doing this? When you start but so many people get it wrong, right? But you don't hear the getting it wrong stories. We like to talk about it because I'll be clear, probably most people get it wrong, most property investors. And you might not like hearing that if you're tuning into this. You're one of those 240,000 downloads here. But most of you, if you're tuning in this, will end up with between 1 and 2 investment properties because you're probably not buying the right stuff at the right time for the right reason. Wrong asset, wrong place, sentiment-driven stuff, wrong market, wrong timing. So it sounds like the sort of the first year of army cadets coming in, going, okay, out of 100 of you, 4 are you going to pass the course, the rest of you are going to be washed out, right? But it's very much like that in property investment. So it is okay to appreciate that, and it is okay to go and get help. So you make sure you're not one of them who wash out, i.e., don't invest at all or end up between 1 or 2 because you bought the wrong asset. So why do people keep coming back to you? Do they just they get this sort of adrenaline rush of, hang on a second, I can create wealth doing this stuff. Can I do it again and again and again and again? How do you hold them back from wanting to go too hard? Because that's probably your hardest job.
Mate, I think it always comes down to obviously serviceability and capital. They're the 2 big things, and they're the 2 big things we always take very much into account. But man, a lot of the time, they're coming through, they're buying the right property at the right price in the right market, all the things that you just said there. If you get those steps right, within 3 to 6 months, you're pulling out your deposit and putting it into another property. And that just allows you to kind of scale and keep building.
And that's when people go, what?
Yeah.
Really?
Yeah, man. I know, it's crazy. And if you get that right, it just snowballs. Like you look at me, mate, like I started back in bloody 2009 with, it was like a 25 grand deposit. I had the first time I was making 35 grand a year. I was struggling. And then what you can build in that time frame, and I think it was I got to income replacement at 28, right? So I got to that in 9 years. But then even what you can build off the back of it from low incomes, anyone can really do it with it. It just comes down to obviously buying right property, right money, right place, and the market will do the heavy lifting for you from that point as well. And I think that's a big thing, man. Like it's people getting that success, and you get that taste of success, and it becomes an obsession. It's almost like an addiction, but it's a good addiction because it's wealth creation. So if you're building,
it's better than fluttering your money on the pony, on the ponies or on the pokies, right? And it is like people actually get addicted
100%.
to
It's
it. They
addictive.
get so,
Yeah.
and the addiction's a bit about winning, but the addiction for most people is around choice, right? What does it allow you to do? So this is about taking advantage in a market which is riddled with fear. There's a lot of reasons why you shouldn't be investing in property at the moment.
Mm.
The other side of that is how do you take advantage of it? There is a lot of reasons why you should be investing in property. Sounds like a paper you can write, Sam.
Mate, it is. It's a funny thing too, Phil, mate. It's if you've got the ability to buy, in my opinion, it's always the right time to buy. And like I was saying, like the serviceability things, all those things come into it. If you know you need something with positive cash flow, even though rates have done what they've done, we can still get positive cash flow deals out there. It's not as if everything you have to buy is going to cost you an arm and a leg. So I think it's just being realistic with what you would need in the portfolio. If you've got the ability to buy right now, like I think it's one of those times where if you get it right, all those things we said before, right market, right place, at the right money, all those things. If you get that right, you're going to be looking back in 12 months and you're going to be pretty happy that you did it. Because there's a lot of markets that are going to slide next year when those rates really take effect and those mortgage repayments are going to really take hold. But I think, the flip side is you get that right, there's going to be select markets that are going to definitely outperform the averages and post some pretty big numbers next year.
Yeah, I tend to agree with you. It's just really getting your stuff sorted out. You're going to be finance ready, and you might not be able to borrow as much as what you could before. But let me give you a news flash. We're not even at average interest rates yet. We've still got some way to go. So your ability to borrow is even going to get tighter moving forward. You got to sort that out. But you mentioned a very different thing. You sort all your stuff out. You let the market do the heavy lifting. And one of the great things about property investment is you've got leverage. So you've got a big partner. Well, you've got two big partners, to be fair. Investing in property in Australia, you've got number one, if you're not a cash buyer, you need a mortgage. So you've got a bank or a lending institution. They're invested that you have a good experience investing in property. They don't want to be repossessing your joint. And the other partner is the government. They're highly invested in supporting rental accommodations for Australians because they don't want to do it themselves. So you see that benefits of that within like taxation benefits of, capital gains tax discounts, negative gearing, all that sort of stuff. So that's how the government invests in it. So you got to get stuck in. Where are you investing at the moment, Sam?
Mate,
Give some markets. Don't be cagey.
What's that?
Give me some markets. Don't be cagey.
You're breaking up a bit, Phil. I can't hear too well, mate.
Give us some markets. Don't be cagey.
Mate, I think money is well spent at the moment away from if we're talking capital cities, I think away from the East Coast, you can get some pretty good buying at the moment. If you're looking Western Australia or South Australia, some very good opportunities. I think there's also some very good regional markets out there right now too. Areas that didn't boom purely because of a COVID-driven exodus to those sorts of areas, which have the potential to be coming back. We're not looking at those sorts of areas. You're looking at areas that got really strong regional hubs, big centers, big populations, their own diverse economies, and they're moving into their next growth phase. And a lot of the time with very, very strong rental yields as well. So there's a lot of good opportunities out there, mate.
That's really cool, man. It's really where those opportunities are. Let's have a quick chat. Let's go to final break. Stay with us. Back in a moment. Welcome back. Phil Tarrant from Smart Property Investment with Sam Gordon, Australian Property Scout. Now, you didn't really give us anything in locations. You said areas that didn't boom as a result of COVID. You talk about regional. Are you talking regional Australia or large, like regional and rural are two very different things, right?
Yeah.
And you have large metropolitan centres outside of the CBDs, and if you think of New South Wales, it'd be places like Wollongong, Central Coast, Newcastle, for example. Yeah. Do you like places like that?
I did, or I do. I invested quite heavily in a lot of those areas and did very well. Yeah. But I've sold out of a couple of those areas too because the additional growth runs that they had, they doubled between 2013 and 2017, and then they almost doubled again in the last 2 years. So, like in my opinion, they're not the right spots to be putting your money because they've already had such a strong growth run. And again, they're probably the areas I'm talking about with the affordability issues that might start popping up over the next couple of years.
Yeah,
I'm probably more talking about your very strong, your regionally economic hubs. So we're talking, solid 50,000 plus populations, some of them 80, 100,000 plus that have their own.
Like Bendigos and Bathursts and those sort of places.
Yeah, mate. Yeah, there's plenty of those out there. And if you're looking capital city wise, to give you two broad cities, Adelaide's still got a lot in the tank, in my opinion, and Perth as well. They're both strong cities. I think Brisbane's going to present some opportunities next year when a bit of in my opinion, a bit of blood's going to be on the streets with interest rates again.
And is that going to be investor blood, or is it going to be a owner-occupier first home?
I think it's going to be a mix. Like, I think that market's still got a long run ahead of it over the next decade. There's a lot of infrastructure spending, a lot of money being spent in that southeast Queensland. They call it the Golden Triangle. And there is a lot being spent in the Golden Triangle, because the Olympics isn't just in Brisbane. Like, yes, Brisbane is the base, but there's a huge spread in terms of where those projects are going, where the high-speed rail links that they're going to be coming into to really connect different areas. There's a lot of infrastructure spending going on, in that city as well. But the affordability issues are still going to be there, like a lot of these other cities or other regions that had huge runs over the last 2 years. I think that'll bring it back a bit. And then when they start chopping rates, I think that'll reignite those markets to have another good run. So the opportunity is going to be there to get back into the market, but I still think it's got a bit of time to kind of ease before it's the right time.
How far are rates going to go?
Oh, come on, mate.
I don't know. You're working property. You must have a view.
I think we've still got a little bit to go. I think we've got a few more to go, little ones. But I do think within probably 12 to 18 months, I do think they'll start chopping them down again. I mean, you know this, man. They're trying to stall the economy, right? They're trying to slow things down to rein in inflation. Once they've done that, they're going to, obviously have caused a bit of stress and a bit of pain around the place. I do honestly think they're going to start chopping them a little bit to try and reignite and try and get some certain sectors flying again. So
yeah. No, it's good. It's good to catch up, mate. I also hear from my people that you've started your own podcast. What's going on there?
And they sit that in the end. I wasn't sure if you let me on the show, mate. No one is a little bit cooking away.
Are you going to be banned from now on in, are you? What are you doing? Tell us about it.
Mate, so the podcast name, it's Scouting Australia. So yeah, the Scouting Australia podcast, mate, pretty much everything to do with property we're going to look to dissect. My own portfolio, how to find the best deals, how to research and find the best markets, strategies, mindset, and all the different things you can pretty much think of within the podcast space that can be covered. We're going to be looking to cover all of it. Going to be very listener driven. I know you're very much an advocate of this as well. We want people to be writing in, sending in their questions, and really kind of getting back to everyone on the different things, the different questions that continually pop up. What do the people really want answered? And one of the big things too, I think, is so often I'll jump on a phone with a client and I'll speak to them for 30 minutes or 60 minutes or whatever. I always think, shit, I should have recorded that call. Like, there was so many nuggets in there that I could have, that we could have put out to so many people and kind of gain those insights from deals or locations or even negotiating and different things like that. So really just going to be trying to give back, as much as we can with the content on that front.
That's cool. Well, mate, podcast's cool. I've been doing it for a while and you'll enjoy it. It's
Thanks, Phil.
Yeah, chatting with people. It's pretty good. I guess that's what you do for a living, right? Just on the phone. So you may as well try and extract some of it. No, cool, man. That's well, wish you all the best. How can people sort of track that down or find you guys? What's the best way?
Yeah, thanks, Phil. Look, it's obviously on all the normal platforms for podcasts. So you got your Spotify, your iTunes, all the rest of it. Pretty much just search up Scouting Australia and you'll be able to find it. Scouting Australia podcast. And mate, as always, you can go to www.australianpropertyscout.com.au and there's a link through there as well if you need an easier way to find it.
There you go. You heard it first. Sam Gordon, Director, Australian Property Scout. Thanks for your time today, mate.
Phil, mate, a pleasure as always. Appreciate it, bud.
And I don't speak beforehand. Merry Christmas, mate. I hope you have a good one. Look forward to catching up with you in the new year. We'll get Sam back on to have a yarn. He's always up to something. He started off by memory farming rabbits. Is that true?
I did, mate. I did.
There you go. See, I do listen.
You do, mate. You got a good memory. That was a while ago we covered that one.
I do listen. Yeah. In the yeah, it's very different to what he does now. Probably we drive a Lamborghini yet, mate? Isn't that the thing for probably? No.
It'll be a Ferrari, mate. But
Ferrari, you reckon? Yet. Okay. Yeah, all right.
It'll be coming.
Cool. Remember to check out smartpropertyinvestment.com.au, social media, Smart Property HQ. You'll find us there. Please keep those reviews coming on all the different platforms you listen to this thing on. Get a real kick out of it. So does the team who are the brains trust of this outfit. They do all the hard work. They just roll me out to have a yarn with people, which is the best part of this. So I'm really appreciative to the hard work that they do. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.